If you're a homeowner over the age of 55, then stop scrolling. Reverse mortgages can help older homeowners supplement their retirement income by tapping into their home equity. However, understanding all nuances before deciding is critical, especially when it impacts a younger spouse. This blog illuminates the issue of reverse mortgages and the younger spouse dilemma. It provides potential strategies and precautions for their protection. The younger spouse dilemma. The younger spouse dilemma arises from the way reverse mortgages are structured. The age of the youngest borrower is a key factor in determining the amount of money available from the reverse mortgage. As the older a borrower is, the more money they can access. It might be tempting to leave a younger spouse off the mortgage to maximize the loan proceeds. However, this strategy can lead to serious problems down the road. If the older spouse, the borrowing spouse, passes away or moves into a care facility, the reverse mortgage loan becomes due. If the younger spouse is not listed as a borrower on the loan, they may be faced with having to repay the loan balance immediately or risk losing the home. Protecting the younger spouse. Recognizing the challenges posed by the younger spouse dilemma, the Department of Housing and Urban Development, HUD, updated its policies in 2014 to include provisions that offer greater protections for non-borrowing spouses, NBS, in federally insured home equity conversion mortgages, HECMs. Under these new guidelines, as long as the non-borrowing spouse meets certain conditions, like continuing to live in the home and maintaining it according to the HECM requirements, they can remain in the home even if the borrowing spouse has passed away, without having to repay the loan immediately. However, it's important to note that non-borrowing spouses cannot access any remaining loan proceeds after the borrowing spouse passes away. Key considerations for potential borrowers. When considering a reverse mortgage, there are several key factors to bear in mind. Consider both spouses. Even if it lowers the loan proceeds, it's usually safer to include both spouses as borrowers if they both meet the age requirement. Read the fine print. Make sure you understand all the terms and conditions of the loan, including what happens after the death of the borrowing spouse. Non-borrowing spouse protections. If one spouse is not old enough to be a borrower, ensure you understand the protections available for non-borrowing spouses and what they must do to qualify. Long-term planning. Consider how a reverse mortgage fits into your overall financial plan. Remember, reverse mortgage loan proceeds are generally tax-free, but they may affect your eligibility for certain benefits like Medicaid. Counseling. HUD requires all potential HECM borrowers to undergo third-party counseling to ensure they understand the product. Make use of this service to get all your questions answered. Give us a like, hit that follow button, and share this video with your friends and family. Stay tuned for more tips on reverse mortgages and how they can work for you.